Give us some of the key takeaways this season.
Hi there. Yeah, sure. So Berkshire reported another strong quarter on Saturday, and I think some of the takeaways are that his cash pile hit a new record of nearly 150 billion. He was very aggressive on buying back Berkshire's own stock, and the company's operating income was up at about 18%. So let's break those down a little bit. Why was cash at a record? Well, I think it's the scarcity of big deals for him to splash the cash on, in part thanks to pretty fierce competition from SPACs for deals and a scarcity of decent stock market bargains since markets have been on such a tear. So the cash mountain only grew in face of that kind of tough combination. And so what does he do in that situation? Well, he buys back Berkshire's stock instead. And we saw him do that pretty aggressively this quarter, buying back about 7.6 billion. And as for operating earnings, well, those were up, helped in part by the economy, which has been recovering from, the dark early days of the pandemic. His energy businesses and his railroad, BNSF, particularly helped here. In fact, BNSF saw record earnings, which was impressive because it has, like the world over, been susceptible to a lot of supply chain pressures. So I think overall investors are still being kept waiting for that big acquisition, but they probably feel pretty good about how the conglomerate is doing and would rather have been buying back Berkshire stock than sort of drowning in cash.
Yeah, it's really not the worst problem to have, right? When it comes to, obviously, that consumer exposure helped the portfolio do very well, but tell me more about the supply chain issues. Are they expected to weigh more as we go into, this key season?
Yeah, they definitely kept a lid on profit, but Buffett still pointed to an uptick in consumer demand for products, which did really help, I think, offset some of those. So while he's keeping an eye on it, I think that investors probably, they look at his earnings very closely for what he says about how the economy is doing. And another interesting thing to point out was that he was a net seller of shares again. In fact, he sold about 2 billion more than he bought, which is an indication that he's very cautious about value in the stock markets right now. They've set high after high, so it shows that things are probably a little bit too expensive for Warren Buffett right now.
And Sally, we had a number of extreme weather events here in the U.S., and we know that, of course, Berkshire has a collection of insurers. How big of an impact did those have on their bottom line, and were there any other negatives that we should watch out for? Yeah,
so his insurance businesses, well, they posted an underwriting loss generally, thanks to those extreme weather events. But again, I think the energy businesses and his railroad helped offset that a little bit. I think in terms of other negatives, well, overall earnings, which really sort of mirror Berkshire's equity investments, well, they were down by more than 60% year over year. But Buffett always kind of emphasizes that investors shouldn't focus too much on quarterly changes in investment gains or losses. So I think really it's about supply chain pressures going forward and how those will impact and whether those will filter through into some of his manufacturing businesses, and if his railroad business that has done so well can continue to kind of thrive despite those.